JD, are we about to see a bidding war for this Copper Junior? There could be some alpha in this episode, mate. Maybe not, because Xanadu has received a bid from Bastion, and it seems cleverly structured to elicit a counter bid from Zijin at a higher price, and fast. I'm keen to explore that with you today, mate. Plus, why we think Regis won't buy Ravenswood, asterisks mostly, depends on price. But to kick things off, mate, we've had a really interesting few days reading all of the emails that have come our way. I haven't replied to them all yet, but I know that you have. And
I can't say that I have yet. So thanks a bunch to all the people that reached out. We had phenomenal feedback, and we thought we'd run through a couple of the best replies, the things that made us laugh a little bit. There were some wicked responses, some great ideas of what we can think about going forward, and a few great one-liners in there. So let's just bounce off each other, mate.
This is the one-liners that you've cut out here. You've ignored all of the feedback, but you've just included the one-liners, the zingers from the money miners. Massive appreciation for sending through your thoughts and comments. It means a lot to know that the listeners, you guys are still invested in the future of Money of Mine, and that certainly came across in those emails. But I'm intrigued in these one-liners, mate. What have we got? All
right, here we go. I'll start us off. So talking about our a bit dour Thursday episode, mate. Saw your episode today. It was like watching two guys whose 20-year-old dog had just died. Pretty grim stuff.
Oh, I got one for you. If Black Sabbath can break up and reunite, maybe you guys will too. Someday, who knows?
Who knows?
I saw the same actually about wasn't about Black Sabbath. Maybe you've got.
It might be coming. Later. It might be coming. Hold your breath. All right. So to give you context on how big a fan I am, I was listening to your episode on the worst mining deals so intently in my car that I missed my turn off by 25 kilometres.
Didn't realise for 25 Ks.
You might need to use your phone or your sat-nav for that, but we are thrilled that we could be so engaging in a podcast.
Unreal. All right, got one for you, mate. I was keen to hear more on the battle for Leonora and the activist interview about Abyssinian metals that got completely pulled. I listened to it twice before it vanished. I still remember driving down the street in Vancouver, nearly having a car accident because I was so locked in. Maybe one day we'll bring that one back. I don't know, JD. No. It's deleted forever, unfortunately. Yeah.
It's out of our hands, but maybe we can tell a story one day. Last but not least, money miners. Imagine how much AC/DC would have wanted to quit when Bon Scott died, and yet they came back even better with the new guy. Fantastic. I never thought we would get mentioned or compared to AC/DC. I didn't think those sort of words went in the same sentence, mate, but lo and behold, us and AC/DC being compared. Thanks awesome. A lot to all the money miners for getting in touch with us, sharing your feedback. We haven't got back to all of it because it's been a complete mountain, but we will get there.
Every day I say, I'll be happy if I end my day with no emails outstanding in my inbox, and it just gets bigger. But we'll get there, mate. We'll get there. Those messages from the money miners, they've brightened the mood here, and they've given me some energy, which I didn't think it was possible to get that energy in this period of time, JD, but it's very relevant because I've actually prepared a quiz for you today.
Have you?
I have, mate. No pressure, but your reputation's on the line. Are you ready? Question 1. Who's building state-of-the-art hybrid power stations for enormous mine sites all over the world?
Cross-Boundary Energy is the only name that comes to
Correct.
mind.
Question 2. Who actually owns and operates them so the mining company doesn't have to lift a finger?
Still Cross-Boundary?
He's on fire. Final question. Who's helping mines cut diesel, cut costs, and cut emissions all without CapEx?
That's an easy one, mate. Cross-Boundary Energy.
Clean sweep, mate. Want to know what you win?
Hopefully their phone number, mate.
If you're running or building a mine and want lower energy bills without building your own bloody power plant, talk to Tim Taylor at Cross-Boundary Energy. That's the answer every time. Phone number in the show notes.
Go Cross-Boundary Energy. All right, mate.
Xanadu copped a bid. I think up front we've got to do a ding, 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 JD. You and I have been shareholders for the best part of 6 months, I want to say, in this stock. So
something about that.
Better disclose that up front.
Yeah, we spoke about this one about 6 odd months ago, and it intrigued us so much that a little while after that we decided to pick up some shares. So yes, we're talking our own book, but we think it's super relevant for the money miners, and it is a fascinating story. We're going to try to answer the question, will there be a bidding war at Xanadu? It's currently trading above bid price, which we'll get into, and there are some juicy details to this one, mate.
What's the 101, fast background on what's going on here, mate?
All right. In a nutshell, Xanadu holds a stake in a huge undeveloped copper gold project in Mongolia. The asset is called Kharmagtai. Now, the capex is close to US 900 million. That's the important detail to know because that has always been the impediment for Xanadu to develop this asset. Now, they have had a bit of a relationship forming with Zijin over time. Xanadu owns about 38% of this big project with our great friends in China, Zijin. So everyone long suspected Zijin of being the ultimate owners of this one, and the company have made no secret that they've tried to get a deal done to that end in recent times.
And effectively over the course of history, there's a few different deal structure options. It's all coalesced in what was briefly an exclusivity period for Zijin last month. That exclusivity actually lapsed, and then we kind of woke up. Was it yesterday? And Xanadu copped an 8-cent bid, not from Zijin, very interestingly.
Yeah, fascinating. So the bid itself, we're just churning away, sitting in the office here, drumming up content for the Director Special newsletter. It's early.
Sign up if you're
morning.
not already, by the way. Get on
in the show notes. And then we see it, recommended 8-cent cash offer. Now, like you mentioned, mate, we'd long been suspecting a bid, but we were a bit surprised in the form that it took. So, like I said, Colin Moorhead, the CEO of the company, and the whole company have been working pretty hard. They've had webinars, they've had calls, they've mentioned it in countless presentations over recent months. Now, Zijin was the glaringly obvious partner to this. So, lo and behold, we crank open this announcement that we see, and Xanadu and Bastion have entered into a agreement. My first thoughts, mate, who the hell are Bastion? Second thoughts, which I thought right after that, you bloody beauty, we could be on for some competition here, mate.
I think we got lucky, to be honest with you, mate, because no, we've talked about this before, but no one ever makes real money trying to predict an M&A corporate transaction. And we're like reading the tea leaves a bit, thinking it was everything was transparent. It was like, yeah, these are all the dates, these are the options. We're like, it just makes sense for Zijin to buy this. So
that's the thing. There was a timeline on it, and that was the only reason in what you can otherwise describe as a pretty fruitless strategy, at least for a punter like
totally.
myself.
And there was a non-controlling, or it became effectively like non-controlling interest. So we sort of you often get screwed over in those situations. And we also thought, I don't know if there's actually any like credible other party bidding here or putting forward a credible funding option. So when we saw it was Bastion, we're like, yes, there's someone else here. This is interesting. But yeah, I was stoked to see that.
Yeah, absolutely, mate. So clearly we've got to unpack a few more details in what came out. So cash offer for 8 cents. Now, there is quite a bit more meat on the bone here. You've got Xanadu, the directors in the company, recommending shareholders accept this. Then you've got Bastion, which is a consortium of a couple parties, excuse me, subscribing for shares at 6 cents. Now, 8-cent bid, 6 cents is what they're subscribing for shares at. And it's not just a completely paltry amount, $17 million worth. Now, as I mentioned, a consortium. That is made up of this group called Buru, which is Singapore-based, and Xanadu director by the name of Ganbaya. Now, Ganbaya is a very important character in this whole narrative because he also owns what is a 13.5% stake in the project. Very, very important detail. Back to the placement. So there's a catch to that. And what you start to uncover as you read more about this deal, right, is that they're doing everything they can to prompt Zijin to get to work. And Zijin have been dragging their feet. As we just described, Zijin have for the longest period thought they're the only natural buyers. They already own a big stake in this. It's Mongolia, has sort of attributes that make it more appealing to a Chinese buyer, all these sorts of things. Now, I think the market, as well as us, thought best case, Zijin come in and, we'd kicked about this idea about maybe a month ago, 8 cents, maybe 8.5 cents if we're lucky. Mm-hmm. But we'll see what sort of happens. We didn't really think there was a logical
plan B. What's your plan B? We actually thought the plan B was the put option and thought, okay, if worst case scenario is 25% carried interest, whatever, like that's like can live with that. Feels like your downside somewhat, protected.
Yeah.
But didn't think there was a credible plan B of another party. But it is interesting, right? The way it's kind of Zijin had exclusivity because they had tendered an NBIO, which the board of Xanadu deemed to be a superior proposal to what the alternative was going to be. The 25% put option would have been shareholders were asked to go and vote on that. But instead they deferred that, gave Zijin exclusivity, and clearly whatever number Zijin put on the table in that NBIO, they backed out of it. And I think they were just kind of, who knows, right? But it's potential that they just played hardball, realised they've got all the power in the negotiating position. their exclusivity lapses. Then all of a sudden, Bastion was actually the plan B we didn't know about all along. Comes to the party, and there's real pressure on Zijin here because of that placement, like you talked about. That placement of $17 million at 6 cents. Now, Zijin's got to make their mind up. Do they want more ownership at a price that's reasonable, or do they not? And if they do, they're going to have to pay north of 8 cents, which means that on that $17 million of cash that's going to be put into the pro forma, they might be having to pay like $25 million for that in terms of what they actually pay. So their incentive to put forward a more compelling bid is only up until they'd save at least $7 million if they submit that offer before the 26th of May, which is only 6 days away. If they submit an offer before then and it's deemed to be a superior proposal, and the board recommends it, and Bastion doesn't exercise their matching right, then all of a sudden, Zijin will save $7 million. That's a decent enough incentive for them to come to the party. Hence why we're kind of really interested in how the next 6 days plays out. Now, I don't think we have like stars in our eyes about what value can be really attained here, because everything about this doesn't look like Bastion wants to enter a bidding war. It just looks to me like Bastion wants Zijin to pay a fair bit more than they've currently been willing to.
And that's where the other part of the ownership that Ganbaya, that director, comes into play, because there is potential if Xanadu goes into another party's hands, i.e. Ganbaya, that when you take into account his ownership interest in the project outside of this sort of joint venture between Zijin and Xanadu, that he would have a bigger stake, he and his partners in the consortium would have a bigger stake than Zijin. And that is a key detail here.
Totally. There's a lot more negotiating leverage that is concentrated with Ganbaya in that case. And if Zijin really wanted to consolidate the full ownership of the project, laid down the track, or at least as much as they can without government, then Ganbaya holds a lot more power and cards in all of that. And right now, what could they feasibly get away with paying? Well, at 8.3 cents, that's where Bastion kind of starts to actually make money. Otherwise, so I think any offer from Zijin, that's the absolute sort of starting point. But depending on the leverage that can be held between Ganbaya, because what Zijin wouldn't want to do is let Bastion acquire this stake in the project by acquiring Xanadu, and then all of a sudden you have to pay like 15 cents instead of 10 cents equivalent for the entire thing. So,
and what you're sort of describing there is the optionality at play here for shareholders who would go onto the market and pick up these shares, right? So after the deal got announced yesterday, we start seeing it trade in the high sevens, below the bid, but people aren't paying up for an over, expecting anything to come through. And then that changes today. Clearly some people have cottoned on to say, hey, we have sort of solid footing at 8 cents here, but we might get 8.5, we might get 9, whatever. We can, weigh those probabilities against each other, whatever you might think it is. It's pretty hard to pick into the mind of what Zijin.
Yeah.
But you've got your downside in a sense protected, and that's the base you've got. That's the downside. You're not losing an awful lot of money if you can pick them up like some shareholders were yesterday at 7.6, 7.7. Awesome, you beauty, right?
Totally. Yeah, totally. It doesn't look like there's too much risk of deal failure in the sense of Bastion not getting 50.1 acceptances. I think it becomes unconditional at that point. So I do think deal risk is actually pretty low here. On the balance of probabilities, the asymmetry is skewed-ish to the upside. However, I wouldn't get carried away with like a bidding war. I think there's one more bid. Is it 9 cents? Is it 10 cents? I don't know. I don't know what gets the deal done, but I'm hopeful as a shareholder. I'm still haven't sold my stake.
Yeah, exactly. I mean, credit to the team at Xanadu. They managed to drum up interest where most people thought there wasn't an awful lot of interest. So keen to see how it kind of plays out from here. But it's an interesting one. Your talking point on how solid is the deal is an interesting one, because shortly after we realized it wasn't Zijin and it was someone else, we were like, well, clearly they're trying to prompt Zijin to come in. So
100%.
Is this someone that's just come in randomly trying to prod it? Are they solid? Do they have a bit behind them? And lo and behold, they do. So
that's the relief.
Yeah.
I think we got lucky, JD. But
I think we got more than lucky, mate. Counting our lucky stars.
Awesome. That was really interesting, mate. Now, JD, the $1 billion man, Mr. Derek Hurd of Sandvik Ground Support, he sat down with us last week and he told us boatloads about ground support, we're pumped to share a bunch of these kind of 1-minute snippets from the convo that we had with the $1 billion man over the coming weeks, starting with this. How has ground support changed over like the last 20 years, for example?
Some people might say not much at the end of the day, because it looks like a steel bolt or a splitty or a friction bolt, depends what you call it, sort of thing. But they've been around forever and a day because they're a good product at the end of the day, and they do their job. But there's been a lot of evolution on sort of the dynamic capability of products, that can hold more capacity, more energy. Again, as these conditions become more challenging, there's more requirements for higher capacity products at the end of the day. The other thing that's probably changed over the years is the frequency of use. Probably ground support was almost an afterthought, 20, 30 years ago. Now it's critical as part of the development cycle, to provide that safe working environment.
Thank you, Derek Hurd and Sandvik Ground Support.
Thanks,
Otherwise,
Derek.
he started his career in R&D, hence why he cares so much about how things have changed over time.
I did. It was a pleasure to learn a lot from Derek. Thank you.
And to round out, JD, we actually had a chinwag about Ravenswood. We recorded it the same day as we did our Liontown episode, but because we chose to include that kind of post-episode rip, we just wanted to make the podcast a realistic time to consume, and we've reserved it to chuck in today. It's still just as relevant. Nothing has changed since, but we're going to have a good yarn about why Regis isn't going to buy Ravenswood.
No less relevant. Here we go.
Who's going to buy Ravenswood? Well, this has been like one of the more advertised sales processes out there, especially in the data room column. There's not much going on sales process front, so you got to write articles about something. And Ravenswood's gotten a fair bit of attention. But Ravenswood Gold Mine in Queensland, it produces about 200,000 ounces of gold annually. It's on the market, and all of the articles, they kind of advertise this gold mine as a $2 billion price tag, right? Now, this mine is jointly owned by EMR Capital and Golden Energy and Resources, which is called GEAR often when it's referred to. EMR Capital, they're obviously a private equity firm. You've spoken with Owen Hegarty on the podcast in the past, JD. And then you've got GEAR. Now, that is a majority owned by Indonesia's Wijaya family. They do a lot in coal, and you'd see them kind of with Lattimores and Stanmore and all those sorts of things. So anyway, EMR and GEAR acquired Ravenswood in 2020 for up to $300 million was the price tag. 100 million of that was up front, and the remaining 200 million was kind of contingent. That's largely all paid or payable. Since then, they've invested a fair bit into Ravenswood. A lot of capital has gone in here. They've reportedly extended the mine's life by 15 years to 2022. I say reportedly because there's a few asterisks to that extension, which I will get to. This is a sale process that has been publicly advertised since November last year. That was 6 months ago. That's like quite a long time to be banging on about a sales process with lots of articles in data room. And over that time, we've watched the bidding pool narrow down in all of the columns to now it's just 2 bidders left. Early days, there were tons of potential bidders like named in these articles. Everyone was saying Capricorn, Gold Road, Ramelius, Evolution, like you name it, every mid-tier was always kind of like reference with a bunch of Chinese, a bunch of Indonesian capital, all that sort of stuff. And now we've got just 2 names. And final bids are due next week. The only 2 contenders apparently left are ASX-listed Regis Resources and Indonesia's United Tractors.
How good's that name?
It's funny. United Tractors, yeah. Anyway. I want to talk about some of the maybe not so obvious elements to this sale process. If you're interested in reading kind of past the press.
Spell them out, mate. What are the details you're keen to discuss?
Firstly, this is a sale process from private equity, and you know my golden rule when it comes to sales processes from private equity, JD.
Never forget, mate. Never buy the bags of PE.
Never buy private equity's bags. Private equity is remarkably good at dressing things up a lot better than they are, and because they're auctions, like they're often competitive. There's a lot of like those dynamics where you dress something up to be really, really good, and then maybe in the long run it might actually turn out to not be as good. And because it was an auction or a sales process, it's competitive. Everyone really, really wants it, and maybe a couple of people need it, and they bid and they outbid. And these private equity guys, they're pretty damn good at kind of harnessing the competitive attention, and often you don't quite realise, what you might have truly bought until a year or so later, and then the reality is, some of the polishes have washed off a little bit. But that's a generalization. It's not to say you can't make money buying off private equity, and plenty of people will point to plenty of examples where people have made lots of money buying off private equity. But in general, that's like a blanket kind of heuristic I roll with.
To go specific now on Ravenswood, spell out some of the key risks as you kind of see them.
Well, even a step before that, the generalization is it's going to be competitive. This is different. This isn't competitive. You've got two parties left in a sales process submitting final bids. Like, that's kind of crazy to me. So in general, the competitive nature might lead people to overpaying for something that is not going to turn out to be as good as you think it is. This one, it might not have the same competitive tension. So
even two might not be what it might first appear to people on the outside. One could just be hanging in to the end with a low ball as well. So it's not as if you've got two eager buyers.
Mate, I think there could be none. Like, but yeah,
absolutely,
that's a real potential. So the other point too is there's some critical risks that you kind of need to accept as a bidder in this sale process. What's been talked about, or what's kind of come out in the duration of this sale process? Why there are only two bidders left? Well, there's a very substantial out of the money hedge book in place here. Bidders, whoever buys Ravenswood has to assume that hedge book, or maybe they could alternatively stump up their own funding to close it out, restructure it, whatever. I haven't been able to get the exact number out of anyone of what the true value of this out of the money hedge book is, but I think it is enormous. Like, my intuition, the kind of range that I've been told or guided towards, this is very, very substantial, like north of 500, 600, 700, 800 million dollars, sort of substantial. So,
to the huge detriment of the current owners, right?
Totally. That's a pretty chunky, it's a pretty chunky part of the capital structure, right?
And you touched on earlier the life extension component and this sort of oft-reported 15 years that they have sort of worked on. What are you thinking on that?
This I don't think the 15-year mine life extension is as certain as it might imagine. This kind of comes into the part where private equity got to kind of making things look better than they actually might be. So there's within that mine plan, there's new ore bodies that kind of rely on untested ore sorting. All of that has risk, right? If you're taking on kind of new technological or applying technology to untested ore body, all those sorts of things, there's risk there. And another kind of part of this sale process too is, do you remember when Newmont was selling Telfer? That sale process was sort of plagued by a leak in one of the TSFs they had there. There's a bit of deja vu here. One of the TSFs here is there's a I don't think it's a terminable kind of leak, but there is an issue here in relation to one of the tailing storage facilities here. But my broader point is this is a week before final bids, and there's two parties supposedly submitting a binding offer in the midst of a gold bull market. That kind of speaks volumes to like the issues that the bidders have had, A, with the asset quality, and B, reconciling the asset quality with the valuation expectations of the vendors. Like $2 billion to accept a lot of risk and hedge book and all that sort of stuff doesn't compute, hence two bidders left.
So let's talk about how it plays out in reality then.
I think so United Tractors and Regis left, right? In this apparently. United Tractors is an Indonesian group. One of the vendors of this is Gear, Indonesian links. EMR, notorious kind of like Owen Hegarty has kind of connections to Indonesian capital, all those sorts of things. So I kind of interpret United Tractors' interest as like questionable in and of itself. I'm not convinced that United Tractors is a genuine kind of credible bidder, purely because I'm like, is it a favor to look like a competitor?
It's a big question.
But I'm told that maybe they are kind of serious, but they might not be serious anywhere near the value expectations of the actual vendor. So United Tractors in and of itself, I'm like unsure of. Even like assume United Tractors is a serious bidder and they might actually like have a value that is palatable. I'm not even sure they'd get FIRB approval. And I know that's kind of maybe a bit questionable or absurd because this is an Indonesian capital as opposed to Chinese capital. But there's definitely overlap. Like the Chinese ethnic Indonesian capital is, I don't know, I don't know how like down the track you want to get, but Ravenswood is a stone's throw away from Townsville military base. That's a pretty kind of critical area. Ferb might be a lot more interested than they otherwise would, given its proximity to a pretty critical
100%,
military
yeah.
base. So
Anyone who's had mates in the army, they've swung through Townsville at
Yeah.
some point.
yeah,
Yeah.
like I don't think it's impossible. I mean, Gear obviously like was able to buy this. Times were different in 2020 as well, but I just think like it's not a home run Ferb outcome in my mind. I think there's risk there, and as vendors, you've got to kind of question, well, how much conditionality am I willing to accept? You accept more conditionality when it's not very competitive. And then Regis, right? Do we actually think Regis is going to buy this? I'm not convinced. I'm not convinced, and I'm certainly not convinced that they're there at anywhere near the value expectations that the vendors have.
That's the point, right? Because I think they would pick it up if they could do it completely on the price that they want. But is that anywhere near what EMR are expecting?
If you're already assuming I don't know, call it close to $1 billion like out of the money hedge book, it's
a stretch.
tough. It can be a stretch here when there's technical risk as well, and even in Regis's case, who are clearly keen to buy something. I mean, that's no doubt, and they're making tremendous cash at the moment. But they're obviously looking to add growth, improve their portfolio. Whether Ravenswood actually does that, I don't know. And Regis doesn't have the same license for M&A in the same way that a lot of other mid tiers do, because their last go of it was buying its stake in Tropicana, which was really poorly received by the market for a good period of time. There, the big consensus was that they overpaid. Now they've like built up a bit more trust. Gold prices run. They've improved their hedge book. Tropicana is clearly the best part of their portfolio now. But do they have the same license for M&A?
It's interesting what a few years did to that deal, and a solid run in the gold price. But license to do a deal, as you sort of frame it, is clearly more limited at Regis than it is at other companies. All the while they're growing their cash pile.
They have to benchmark this opportunity next to like the other opportunities which are clearly in the market at the same time. And on that point, there are like two like very present real ways that they could allocate their capital or seek growth, and both of them are far more in their home court. I'm talking about Bellevue, who was like publicly declared that they're running a strategic review. Like, we're pretty sure that they're like showing signs of being serious about that. There's a data room, to the best of our knowledge. A bunch of companies mid tiers have been invited into that data room. I don't think like details about timing or everything like that, but there's a proper process there underway there for Bellevue to maximize shareholder value, which certainly involves exploring kind of best value M&A on its cards, which it's very possible Regis could be a serious contender in that. And the other one is, we've talked about it a few times, Focus Minerals is actively selling their Laverton, all of their tenure in the Laverton, which there's a lot of gold there that Focus have kind of land grabbed for many years and not done very much with. But there's a lot of ounces there. The quality and how long it'll take and all that sort of stuff, all of that's to be proven out. But
much more under the radar given Chinese ownership and
totally.
All the sort of questions around that, but
in the right part of the world though, and there's a lot of players in that Laverton region. Even Regis themselves will have synergies, but there's possibly like 4 million ounces of mineral resource that can be acquired there for like in the hundreds of millions of dollars, but a reasonable number. That like what would the market prefer to see Regis do? I think it would have much less appetite for it to go into state, take on like again more hedging, take on technical risk, all those sorts of things. But that's my gut feel. And where does that leave the sales process? Well, if you were Regis, what do? Probably put in a pretty lowball bid, and that lowball bid might be just like the actual price you'd be willing to stump up if it like a super lowball bid. And private equity, what are they going to do? They're probably not going to accept it. I'd put good money that this doesn't sell. Like that's my leading hypothesis is that it doesn't sell. Or maybe Gear buyer's EMR stake. That like and for like negligible profit, and that lets kind of EMR have the kind of closure outcome that's required for their LPs and the funds and the asset and all that sort of stuff. But I struggle to sort of see if these are the only two parties there. I'm more skeptical of an outcome that kind of will actually be acceptable and palatable, unless they accept a very low ball offer from Regis.
Yeah, absolutely. That's the other aspect, just to emphasize with PE. They bought it in 2020, but who knows when that particular fund, I think that was already a couple years old. They have definitive timelines. They have pressure on when they need to have outcomes and get stuff done. And if it doesn't sell now, maybe they can extend a few years with the fund and stuff. Maybe they had a few more years up their sleeve, but they have outcome pressures that, unless they roll it into the next fund and these sorts of things, which PE does over time, but they no doubt have pressures put on them as well to achieve outcomes. So
I do think both like Focus and Bellevue are going to be competitive, and
undoubtedly,
and
Bellevue back down at that below the raise price.
Yeah, and Ravenswood is not competitive, right? So there's like what kind of bargain you're going to get on a relative basis. Like I don't know, but yeah, like they'd be the equations for a company like Regis.
Yeah. Given we've also said in the past that winning a competitive auction process is no great achievement.
Yeah.
But we'll see what happens on that front, given the nature of it.
Absolutely, mate. I think we've got some partners to thank, mate.
Absolutely. A massive thank you to Mineral Mining Services, Grandwood, Sandvik Ground Support, CRE Insurance, K-Drill, KCA Site Services, Black Diamond Drilling Services, and Cross Boundary Energy. Hooroo.